Well, let's quickly hop across to Manisha and look at what's making headlines in the commodities world. Manisha, over to you.
Thank you for that, Sudhi. Well, I'm looking at base metal prices, and within that, copper, it's called as daughter copper, and the kind of economic data that we have seen coming from Europe and US and China clearly has not been supportive. And with the numbers, when you read into the CFTC data, you will understand that many of the speculative long positions also seem to have now ended. And it perhaps is a new opportunity, but at these current levels, copper clearly seems to be struggling to hold those gains. Well, there is support at this point in time from the decline in dollar index. The bond yields are on the lower side. There also is support from the US rate cut expectations. If you look at the probabilities for the month of September now, there is a 100% probability of a 25 basis points cut and a 30% a lower probability of a 50 basis points cut as well. Well, that has been in conversation for most part of last month there. The other things to watch out really is in sense of prices is that while we have jumped from a 5-month low of $3.95 that was hit on 7th of August, we're trading at 4.1 at this point in time. And the reason for this is that the Chinese exports have eased from recent records. That tells you that the Chinese domestic demand also seems to be picking up. The other thing is, remember, we were talking about on how Chinese smelters have cut production because the TCRC was not in favor. But the latest report suggests that the Chinese smelters are now pursuing new projects to comply with output mandates. So that tells you that there could be more supplies coming in from China itself. The markets also are looking at inventory surge, and that is something that is keeping the prices in check. The LME inventories have tripled since the month of May and are trading at a 5-year highs right now. So in the month of May, the LME inventories stood at 103,000 tons. Right now, they stand at 320,000 tons. So the copper inventories since the month of May have tripled on LME. There are various brokerage reports as well suggesting that we're looking at a surplus now for this year and the next couple of years as well. 75% of inventories that are on copper are now in Taiwan and South Korea. There also was a very interesting report that came in from Macquarie, which says that the AV demand and the EV demand is not so strong right now, is the reason that they're looking at surplus in this year to the tune of 265,000 tons, next year at 305,000 tons, and by 2026 also they believe you could be looking at just more copper surplus continuing into the market. It's not just Macquarie saying that, by the way. You have similar report from BNP Paribas anticipating nearly 150 to 200,000 tons of surplus in this year. There also is a similar report from International Copper Study Group, which says that from the month of Jan to May, there already is a surplus of around 416,000 tons. So, well, yes, the copper demand is anticipated going forward from EV and etc. But currently in the spot markets, there is a surplus and even a discount in the spot markets as it goes to copper.
All right, Manisha, thank you very much for that. So that's commodities for you. We'll take a